Is this the rally that will make us millionaires? Welcome back to the channel, everyone. It's Friday evening, December 5th, 2025, and it's time for our monthly update. We're going to dive into how our QQQ and QLD investments have performed and take a closer look at what's been happening in the markets. Since April 9th, 2025, we've witnessed a historic market comeback. Over the past 8 months, QQQ has been on a bullish run, rising from $402 on April 7, 2025, to $625 today. It even tagged $637 on October 29, 2025. From May 1 to November 13 for 7 months, QQQ had stayed above the SMA 50 purple line. It has only touched this key support level twice since May 1, 2025, first on September 2 and second on November 7. Both times, QQQ was able to rebound. However, QQQ went below on November 17 and dipped to $580 on November 21. After staying 6 trading days under the SMA 50 purple line, QQQ was able to move above the SMA 50 purple line on November 25. As you can see in the SMA 20 black line, which indicates short-term momentum, QQQ is also above the SMA 20 black line for the past 7 trading days. This behavior indicates QQQ maintains strong bullish momentum. We should monitor whether QQQ can stay above the SMA 20 black line and the SMA 50 purple line. If it falls below the SMA 50 purple line, I believe it will bounce from at least the SMA 200 green line. When QQQ approaches the SMA 50 purple line or SMA 200 green line, these present excellent buying opportunities for QQQ, QLD, and TQQQ. U.S. stocks extended their winning streak to 4 days on Friday, keeping major indexes near record highs. September's core PCE inflation, the Fed's preferred gauge, held steady at 2.8% year-over-year, signaling continued but gradual progress toward the 2% target, while consumer confidence posted its first increase in 5 months and short-term inflation expectations eased. Personal income and spending met forecasts, weekly jobless claims fell to their lowest since September 2022, and layoffs rose but remained historically low. Bitcoin tumbled below $90,000 for its sharpest drop, gold held near $4,230, and Treasury yields climbed, pushing the 10-year note to 4.12% in its worst week in 6 months. With cooling inflation data in hand, markets now assign an 87% probability to a 25 basis point Federal Reserve rate cut at next week's meeting, up sharply from a month ago, setting the stage for potential year-end momentum if the Fed delivers a dovish tone. Moving on to our ETF comparison, QQQ is at $625, which is 16% above the previous all-time high of $540 from February 19, 2025. QLD, the 2x leveraged version, is priced around $73. This is a 21% increase from its peak of $60 in December 2024. TQQQ, the 3x leveraged version, is at $56, representing a 21% increase from its peak of $46 in December 2024. This shows that leveraged ETFs delivered better percentage returns in a rising market. My personal portfolio reflects this. QQQ has a 29% return, QLD has 48%, and TQQQ leads with 82%. Why the difference? You could purchase TQQQ at much cheaper prices during the downturn. For example, on April 7, 2025, TQQQ traded at $17.50, a 69% discount from today's $56. Meanwhile, QQQ was at $402, only a 36% discount from today's $625, which is much smaller than TQQQ's 69% discount. Now for the QQQ versus QLD $100 Challenge Portfolio Update. For QQQ, we've invested a total of $4,500. Our current unrealized gain is approximately $1,300, a 29% return. Our average cost per share is $482.82. On November 18, when QQQ dipped, I added 0.167 shares at $597. For QLD, results are even better. We've also invested $4,500. On November 18, right after I bought QQQ, I bought 0.745 shares of QLD at $134. The average cost per share is $49.29 after the QLD split. As of now, our unrealized gain is about $2,180, giving us a return of approximately 48%. We will continue to see larger gaps between QLD and QQQ performance in rising markets. These results reflect the leveraged nature of QLD, which is designed to deliver 2 times the daily performance of the Nasdaq 100. While leverage increases volatility, it also provides greater upside potential when markets recover. Since May 2024, we've been investing at least $100 into QQQ and $100 into QLD every single month. This consistent, disciplined approach is called dollar cost averaging, or DCA. The goal is to reduce the impact of short-term market fluctuations by spreading our investments over time. By doing this, we purchase more shares when prices are low and fewer shares when prices are high, all while maintaining a long-term focus. Our approach has just 4 simple rules: invest monthly, hold long-term, never sell, and never use dangerous margin. This strategy is designed to win over the long run and take emotion out of the equation. If you want to see the 30 years of data that proves this works, check out my deep dive videos: Cash versus SPY versus QQQ versus QLD versus TQQQ, 30-year showdown. That wraps up our incredible December 2025 update. The strategy is working, and the results speak for themselves. If you got value from this video, smash that like button, subscribe so you don't miss next month's update, and let me know your thoughts in the comments. As always, this is for entertainment only and not financial advice. Make sure your investments fit your own goals. Thank you for watching. Until then, stay consistent, and let the power of compounding do the work. Happy investing!